Omri, it's so great to see you again. I always love our chats. This time it will be about mass payouts, gig workers, and what companies are doing to prepare to scale that in the year to come. So thanks for making the time.
Yeah, you got it. Thanks for having me again.
So let's start with a basic definition. What do we mean by a gig worker? What is a gig worker in your vocabulary?
That's a great question that I think will expand over time. I'll put it in two ways. One, I see someone who's looking for extra income by doing very task-driven jobs. The second thing, though, is what I'm really interested about is we've seen a lot of gig workers that make a combination of gig economy jobs or full-time work, which I think is fascinating. But I think that boiling it down to doing tasks that are either time-based or task-based to receive revenue is a good overview, even though we've had those types of jobs before. We're just rebranding them.
Yep. So freelancer, freelancers are gig workers. So are, I guess, the more contemporary definition, which is the delivery people, Uber drivers, and so forth. So it's a 1099 worker, basically.
It is. And I think that what's interesting, though, is like we're going to still have consultants that are 1099s, right? Those might not get into it. So broadcasting is fully 1099 is a bit too broad.
Right.
I think it's basically someone that is partnering with the company to perform a gig on behalf of that company's ecosystem / marketplace.
Got it.
And that's where it really clicks in. And I think that's important because like 1099s are also things that you need to ship out for businesses once in a while. So it's important to kind of acknowledge that. But yeah, I think that in general, freelancers, 1099s, we're in the right ballpark.
So what is the general dynamic that you see happening in the space with the platforms who work with you to actually pay those workers?
Sure. I think that first and foremost, the platforms have to have a really compelling pitch to get an individual to say, hey, I would like to earn some extra income doing this work. And one of the hardest things that is in the space is, I think a lot of people try the pitch. It's retaining the gig worker. I think that retention is the hardest part of it. And if you talk to or work with any gig economy companies, retention is their number one thing, because there's a lot of people who try or churn very quickly. I don't think that it's the same terms of churn as, B2B company, because it's kind of like people who try to download an app, try it out, and versus the super users. But essentially what you're looking to do over time is to figure out, as the gig worker, is this going to become a majority of my income? Do I like the job, or does it work with my schedule and my livelihood? And then on the gig economy company, they're trying to understand, okay, which one of our gig workers will grow their amount of usage on our platform to generate us X revenue, to make rev share compelling enough for them until we hit a ceiling, right? Because no one can work more than X hours per week or per month.
Right.
I think it's really interesting. I know that both essentially have a North Star. The gig worker will say, how much money can I make here per month? And is that worth my time? And the company would say, okay, what bucket of gig worker does it fall into? Is this the part-time weekly, the part-time monthly, the full-time weekly? And I think that it's really actually important to look at this from a weekly perspective, because you're looking at actual supply and demand. And a lot of gig economy companies, their supply and demand is weekly and daily rather than monthly, right? So if I'm available on the first and second Thursday of the month, it's not as compelling for the gig economy company to offer my services. Where if I can at least block out 3 hours every day that I can devote to that gig economy company, it actually starts being a lot more interesting. And that's why you also see gig workers building, right? Multiple companies. Maybe you drive in the morning and then you complete other tasks in the afternoon. It's pretty common to see that kind of mixture.
Well, what's interesting, I think, is that now, given the inflationary pressures on just about everyone, you see a lot of people clocking in and taking advantage of the on-demand work environment that gig platforms provide. I know the Uber CEO mentioned that on the last earnings call, where there's an awful lot of volume. People may not be clocking in every day, but multiple times a week to pick up a few extra dollars. And I would imagine, particularly around the holidays, it becomes even more important and certainly more relevant for people's income.
Yeah, I think the holidays for sure, because people do need that extra income. But I do think that the way the current economic environment is going is we might have borrowed too much, or we might have deferred paying things too much, or we might have bought a house that is maybe 5% more expensive from a mortgage perspective than we thought.
Right.
And I think that we're going to start seeing a slow reset going from what people can make in the industry. We've been seeing just so many announcements about companies going through layoffs. And that means also that the average wage gap is going to move around. And I think that I actually do see that we'll see more participation from non-gig workers, people who haven't tried it, stepping into the gig economy in 2023 to supplement cash as the economy starts being a little bit more certain and you can't rely on anything outside of a paycheck, right? I think that as the market will become more volatile, cash is going to be really nice.
Yep. Yeah, no, that's for sure. I mean, and that's what we're seeing. I mean, the work that we've done together in kind of capturing the data associated with expected volumes. I mean, 85% of gig worker platforms do expect their volumes to increase by 10% over the next 3 years. I mean, it does suggest that demand will continue. I think that was probably at a point in time when the inflation wasn't raging as much as it is today. So those numbers may be even a little bit understated. I guess the question is, how are these gig platforms paying those workers today? And are they able to keep up with that steady increase in demand?
Yeah, so I mean, there's multiple ways to pay, but I think that the payment methods that matter are the fastest ones. So, like today, RTP is interesting because you can pay someone on the weekend. Sorry about that notification. That is Zoom. And then in the future, you'll start seeing FedNow become an interesting source. We have Push to Card, which is very popular. We have PayPal and even Zelle. I read a wonderful article on Zelle this weekend about Zelle and their advantages. But I think it's really, really interesting how speed is totally a factor. And then transparency, right? So I think that for the vendor, speed and transparency is going to become a critical part. We've even started hearing from companies that they would like to show scheduled payments to vendors to basically say, hey, we expect you to receive these funds by Friday. Today's Monday, for example. And then on the scale side, I think that's where things will get harder. More gig workers, and especially more gig workers trying things out, meaning more W-9s, more 1099s, more segmentation about, will this gig worker have a higher probability to be a retained one and so forth, more payments, more approvals, more a lot. I think to me, the most interesting thing is actually the vendor management side of it. Because you're going to have more emails, more questions, more inconsistencies. And essentially what I see is finance teams really partnering with operations teams to, balance this burden of an increase in the amount of gig economy activity and prospecting gig workers as they start to apply and determine what they want to do. And then really the payments experience is a huge part of the retention angle, right?
Yep.
Can you pay today? Can you pay in advance? Can you pay as soon as the job is done? Can they see the funds in their bank account by the end of the job? All of those questions are a critical part. And I think that because cash is going to be king for the next while, seeing that cash delivered to a PayPal wallet or a crypto wallet or your bank account or whatever it is, right, or a debit card is going to be the critical piece here that gives the gig worker resolve that, yes, it's great to work here. I think if you pay 2 weeks in arrears, then no problem.
So there are two issues I think from listening to what you just said. So there's the there's the scale, there's more payments, but then there's the variability in both timing and amount. So it's a lot to manage. If you're a platform that can kind of prepare, you know that there's going to be growth, but you're now managing, a lot of different variables, frequency to the same person, what those payments are, and then the method of payment, which, to your point, needs to be instant.
Yeah, and I think that's the interesting part. Each gig economy company will learn the behaviors of about 70 to 80%, right, of their gig workers. And I think that at the end of the day, it's really important to focus on retention right now. I think that a lot of companies focus on launching new markets, which is fantastic, but launching new markets without having really good retention is also a thing to think about, right? And then investing in the gig worker communication, the notifications, the transparency. You basically want to build a case as a gig economy company that your that your income generated as a gig worker is going up and to the right.
Yep, sure.
And that your time to collect that cash is faster than anywhere else, right? Because I think those are two really important factors, the transparency and the time to collect cash, that will drive a gig worker towards retention.
Omri, do you, when 17% of gig worker platforms say that their most serious challenge is not able to keep up with the scale and the demand, is this what they're talking about, or is there something else?
So I think that a lot of companies try to build things in-house. We've had this conversation before. So at some point, like, for example, traditional accounts payable breaks, and then you start looking for like more of a mass payouts infrastructure to say, hey, I need to deploy money. But I think the thing that's really important there, it's not just about deploying the money. It's about, what if you have a legal requirement because you're a large enough company that you have to collect a W-9 before sending a payment, right? Or what if you want to do a TIN check on a gig worker, right? All these small things, I think that as you get bigger, your internal compliance and rigidity also gets more complex. So supply chain of sending a payment or onboarding a gig worker becomes a little bit bigger. And then, so you're not only compounding the amount of steps that you have to do per gig worker action, but you're also increasing the amount of gig workers. So I think that's what departments are stressed out about. They are thinking about, okay, we have a mediocre process right now. What are we going to do moving forward to make it better?
And I think we also discovered that 2/3 of platforms that pay more than 2,500 invoices a month believe that automation is, one of their top priorities, obviously for the obvious reason, but automation comes in different forms, doesn't it?
Yeah, and I think that's what's interesting. Like, when we say invoices, I think of a OCR, bill pay solution, wherein it's like a business is giving an invoice. But most of these gig economy companies, there's a database logging all of the jobs being done. And then the question is, can that database talk to an ERP? Can it talk to a payments platform? And can we remit the funds and make sure that the logging and the data aggregation is easy? So then the money movement can be the focus, right? I think that's the really interesting part. And if teams don't have this info, then you're talking about exporting data into a CSV, hand typing information, making mistakes. And as you increase the amount of work, also the amount of mistakes that can happen can increase. So if you can connect your database to your payout system, then it becomes a lot easier to manage.
Well, it also becomes easier to manage from the customer service perspective, right? Those who say that they have, a lot of issues responding to requests. Is this right? When am I getting paid? I thought I was getting paid X and I got Y. I mean, that becomes, a telltale for at least thinking about what an automated system needs to be that perhaps isn't in place at the present time.
Yeah, and I think that like the number one thing that you can do there is just look at all your support questions for over the past 6 months and figure out what buckets they fall into and just start to resolve those. If it's because your notifications say that money was sent, but not when it will arrive in your bank account, and then number one question is, when will I see my money in my bank account? Then it becomes pretty easy to solve for that, right? And that's something that we do a lot with our partners.
It's interesting. It's sort of like follow the breadcrumbs.
Yeah, but a lot of people don't have the time to do so. So it's our responsibility as a company at Routable to say, hey, we work with other folks in similar industries. The top questions that they ask about are X, Y, and Z. The information that we should prioritize sharing is this. If they want to get more information, here's where we can list it. So one of my biggest joys is that when a company really steps into automation and really tries to understand what are the top requirements for their gig workers, and we actually go and break things down and say, hey, what are the most important questions that your support team is getting asked? Great. Here's the information. Let's build some guides and internal knowledge to make sure that you don't have to build anything new, and that the ecosystem is providing the information you need.
How important is all of this now, given the pressures that every business feels to manage their own operating expenses? So, there's automation, there's, you can't hire enough people to do this. You don't really have the ability to staff the support teams. Seems like it's a business case made for automation.
I think it is a business case, but because you're talking about reducing costs, which every business is going to look into doing now. That's what we're reading in the headlines in general, right? Each business is trying to reduce their operating costs. And then you're going to try to maintain and increase retention, which is just ensuring that the revenue will continue to grow in a certain percent. So at the end of the day, I think that this is the right time to have these conversations.
What is the thesis between automation, operating margin improvement, and overall efficiency and retention? What is the calculus? What's the formula, Omri?
Sure, it's a great question. I don't have the math for me in front of me right now, but
come on, get that whiteboard going.
No, I know, but I think
solve some equations.
What we're trying to solve for is, can I solve this problem with more humans and more manual work, or can I handle this scale and even more with the same team and having each team member more efficient? One of the things that we strive for is to give people time back. So I think like that's step two. First of all, is to automate. Step two is to give people time back. I'm sure that a lot of the work that is bogging teams today is not what I would call in their job requirements. It's additional work that they're doing to make up for the stress or the lack of internal infrastructure that they have. So the question is, how can we get each team member to be great at their job, which means maybe taking away the work that they don't need to do and can be automated. But I think that that's kind of it at the end of the day. When you're thinking about your operating margins, you're trying to make sure that each team member is the best at what they do and they're contributing to full force, and that you're not paying for additional things that are not necessary right now. I think that's what every business is going to be really thinking through. Is this necessary right now? Meaning like, if we don't solve for this, will we hire more people? Can we do so? If we do solve for this, does this allow us to save operating costs, scale, and not hire too many more people, right? I know like we want to promote job growth for sure, but at the end of the day, the market that we're falling into right now, that's where a lot of VPs of finance are going to have the conversation, right? About a cash strategy moving forward, and then margins.
So what are the obstacles? I mean, it just seems so obvious, right? We're having this conversation. We've had similar conversations. Like, what are the real and perceived obstacles to taking that step?
I think it's step one is just having the conversation. I know we've had that before, but I do believe because these teams are overwhelmed, they don't have the conversation. So I really mean that. When you're in a storm, you can't plan for the next thing, right?
That's true.
So I think
you're just trying to survive, keep the boat from capsizing.
Exactly. And for what it's worth, all these teams right now are getting ready for 1099 season. So they might not even be able to solve this until February, right? You have gig economy companies getting prepped, making sure they have all of their W-9 data, making sure that they can issue on time. They have hard deadlines that they can't mess with. So right now might not be the time to have the conversation. Right now might just be, go towards the finish line. But come February, and obviously they also have a tax deadline. So they're in a whirlwind right now. But when time does come up, I think a good conversation is to review where in the funnel. We don't really talk about payments functionality as funnels. That's more of a marketing thing. But where in the funnel are things breaking? Is it in the collecting vendor data? Is it in the figuring out who to pay what? Is it in the reporting? All those questions are the right ones to ask. And even if they seem redundant, seeing your payments flow and your vendor onboarding flow is a really critical part to creating retention and then reducing those operating costs.
And the key driver, I mean, maybe there's two of them, but the key driver, whether it's now or February, is it retention of gig workers as the lever to deploy these changes, or is it to reduce operating margins because you can just be more efficient and scale?
I think it's the retention of gig workers, and I'll tell you why. If you are seeing your retention increase, you can make a lot more moves with your operating costs. If you're cutting your operating costs, it doesn't mean that your retention is going to get better.
It's true.
So I would solve for that one first.
Got it. Think about the last conversation you had with VP of Finance or CFO at a gig platform. What did they ask you?
Time. I'm dead serious, Karen. They were just focused right now. They were trying to figure out when and how to invest in the future, but they needed time. That's it. I think that's it. It's an interesting thing that you'll see consistently. These teams are growing. There's more demand for their ecosystems. There's more demand for gig workers and these jobs. So they're just very much heads down, and they're just asking for time.
Heads down. I need the time. Talk to me in February.
Yeah, very much so. But then let's talk about automating. Let's talk about reducing the amount of messages that we receive from vendors. Let's pay faster. Let's get data around that, everything around that angle.
And let's record all the frictions between now and that period of time to
100%.
to help diagnose what is in fact the real source of the problem and what automation.
I really do think that's accurate. Between November 15th to the end of January, you will learn so much about what's working and not working with your gig economy business from a vendor management, compliance, payment infrastructure angle, right? So it's a good time to go take notes.
That sounds great, Omri. Always a pleasure. Thanks for your time today. Good.
Thank you as well. I really appreciate it.
Thank you. Bye-bye now.